Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals. Got our beautiful Miami live underwater cam on. Wow, there's some cool fish going by today. Lots of sergeant majors. I've been pretty active down here for quite some time. Coral looks pretty healthy too. Those are sergeant majors too, my understanding. Those little fish with the stripes. If I'm wrong, let me know. But wow, what a beautiful day out there today. Let's take a look at prices this morning. And again, that's the Coral City cam. That's the Miami underwater cam. And I think that, where does they say that is? That's urban reef environment in Miami, located at the shoreline of Port Miami in 9 feet of water. That is just so cool. Beautiful day. Let's take a look at spot prices today. I'm going to do a quick reset here, and let's see, about the same, sideways. God, sideways. That's the best I can say for the last 2 weeks now. Market's currently at 1792. It's hovering around this 1800 mark, currently sitting at 1804. Silver, same thing, hovering around this 24 mark, sideways, 23.99 to 24.31, and platinum hovering around this $1,000 mark, a little sub thousand, but 972 to 988. Man, I just like platinum. It just doesn't seem to be going anywhere. Neither does the other metals as of right now, too. But this is the calm before the storm, and a calm before the storm is not like your typical day or two. I mean, this could be a while before the storm really kicks in. But gosh, I feel something coming. I don't know about the rest of you folks, but I feel something. I just feel it in my bones. I don't know what it is, but I feel something coming up. Well, let's get out of spots because, again, nothing too exciting here, just a good opportunity to buy at these low prices, which you will never see one day. One day you'll look back at these numbers right here, 17, 1800, 24, 980, and you'll be telling friends, God, I remember when gold used to be 2000 or 1800. And of course, many of us folks that are a little bit older can say that we remember when gold used to be like $100, $140, even below that. Some of you folks out there probably remember. I remember when silver used to be $1.50 when I was a little kid. Don't forget, my father was a dealer in precious metals. I grew up in this business, rare coins and precious metals. So I remember those days as a little kid. I remember silver dollars used to be worth like $1.50. My father bought, what was it? He bought 55-gallon drums up when we lived up in Maryland at one time. He had met a farmer who was plowing through his field and tore open a 55-gallon drum full of silver dollars. My father had bought 3 55-gallon drums, I think it was, from the guy of silver dollars for like $1.50 each, $1.25 each. I think he made 25 cents each or 50 cents a coin, which was a lot at the time. But again, that it tells you, man, you can look back on those days, and we'll never see. You'll never buy a silver dollar for $1.50. You're never going to buy a silver dollar for $10 ever again. You're never going to probably buy a silver dollar for $20 in the future sometime. You're going to look at this point and you're going to say, wow, wish I'd bought more. However, remember, this is about wealth preservation. I don't want you to get all uppity thinking you're going to get rich quick. I mean, it could very well happen when bubbles happen, and we are in a bubble. We are in the everything bubble right now. We are in the biggest credit bubble in history ever. This is going to go down in history books when it does go down. So, but no less, you're going to look back at these prices and go, God, that was cheap. U.S. Misery Index. I'm going to start kind of looking at this page. I told you yesterday I would try to compare it to some other charts with gold. I didn't get a chance to do that last night or this morning. However, I did want to point out a few things that I do know. The last couple bull markets, I want to look at this Misery Index. Now, the Misery Index is equals unemployment rate 5.4 plus the inflation rate 5.37. And there's a whole bunch of things you can do, but I kind of just went by year here because one of the first things that I wanted to compare is our gold bull markets. Now take a look at this. Our first big gold, Nixon took us off the gold standard right about here, I think it was, 72. Was it 72 officially? Right about here. However, this is where we started getting in trouble. This is where all the countries like France and everyone started asking for their gold back. They wanted the United States was just spending too much money at the time, and the Europeans and a lot of countries says they're not really holding up their promise to keep a strong dollar. They're just printing more and more to and again, a lot had to do with the Vietnam War at the time too. So and other things, we were just becoming federal government was just spending more and more, and again, that's the case today, even worse. But no less, take a look at here. Look at the Misery Index. You'll also notice, and if you remember or you've looked before. therefore the price in gold also seems to rise about the same level here. And then you've got gold going up during the early 70s, and then look, take 1980 right here. Misery index at its very highest. There was the peak of precious metals too at the time, gold and silver. So that was the first major, let's say major bull market in precious metals that I remember, 1980. And look at the misery index. The blue and the red. Let's see, I think the blue again represents unemployment rate, and the inflation rate would be the red. Well, that would make sense considering that interest rates at the time, CDs, gosh, I remember CDs were paying, what the heck was it? Like 8% or something like that, some crazy number. Mortgages, if you wanted a mortgage, I think some mortgages had gone up to as high as, what, 12% plus or 16%. Not a fixed rate, but I think it was a floating rate. So interest rates for mortgages were just stupid crazy. I remember, I know someone that got a 12% fixed rate at the time on an FHA. I mean, think about that. Again, that's 1980, and gold was high too. So that thing that you hear from people, oh, when the interest rates are way high and savings rates are way high, people get out of gold. Well, that's total bullshit, folks, because again, in 1980, interest rates were just insane, and gold and silver prices were insane as well. But take a look. The inflation was insane too at the time too. So I mean, that probably has a big factor to do with precious metals, is inflation as much as the unemployment rate. But let's go down the misery index here. Take a look at precious metals. Pretty much sucked through this whole period. Here's the beginning. And again, it's kind of odd if you take a look. Here's the beginning of the bull market of 2012. That was a 10-year bull market. It's just a long spread out bull. But take a look again. The inflation kind of is rising here. And again, it wasn't up every year, but it started about this point right here is when precious metals started going up. And where was our high? Isn't it odd enough? 2011, 2012 was a high in precious metals. Also our high in the misery index too, if you take a look here. Again, it looks like mostly more of an unemployment problem than an inflation problem at the time. However, as you can see, after this, the misery index starts to go down, and so did precious metals prices up until about this point, 2016, which is when our current bull market started, I believe. And again, it's a spread out bull market. These things just don't happen overnight. You know, when the public finds out is when you get that bubble territory, when it just starts going up and up and up, or unless some bank decides to throw a ton of money behind it. So, well, I won't say ton of money, but until the public starts getting into it real heavy and everyone gets into it, we're not even close to bubble territory. So let's take a look here, 2015, 2016, and as the misery index goes up, look at 2020. There was our last peak, folks, in precious metals. So the misery index peaks right here do coincide with our peaks in, you know, our highs in precious metals over the last few decades. Kind of think that's interesting. I didn't expect to find otherwise. That was my first thought. Hey, let me just compare our past bull markets, you know, the three that I'm familiar with, 1980s, 2012, and the current bull market we're in right now, or we're heading into. And, you know, the misery index lines up with those kind of pretty perfectly. There's all kinds of other data on this misery index I'm going to go over here as well. So look forward to that here in the future. And like I said, I got to spend a little time, wrap my head around it, and see if I can do some comparisons here. But this is a site you can look at yourself. So, you know, feel free to make some comments if you find anything and you take a look. It's called the United States Misery Index, .us index by year. But just type in on your search engine United States Misery Index. It'll pop right up down there somewhere. Pretty cool, too. And it's got all kinds of cool ways to look at inflation rate by year, unemployment rate by month, unemployment rate by year, indexed by Congress even. Let's go into gata.org. Let's see what kind of articles are out here. Sabanian wants to tap green metals boom as gold deals lack value. This is some big mining company. LTD said said the precious metals miners immediate priorities expanded to the battery metals rather than gold. That's kind of interesting. Expansion into, you know, diversifying your company is not a bad idea. I don't think that's a negative for gold or silver or anything like that. I think that's a positive. I mean, you can look at it and say, oh, are they getting out of the gold business? No, they're looking more into other businesses, and that's smart. Again, diversification is a good thing. I think a lot of people right now are talking about uranium being a good deal. However, I think the fact that I know about it it's probably too late to get in on that deal. And again, I think the assumption with a lot of people with uranium is, yes, we're going to be looking for sources of energy, cleaner sources of energy than coal. And nuclear energy probably fills that role, but how long does it take to build a nuclear power plant? You know, how long does it take to get one up online? And how often do the current power plants have to refresh their supplies? I mean, there's a question I just don't know. And besides, Iran's going to be in the nuclear market pretty soon. Maybe they got some stuff for sale, and that was actually a joke. No less. I mean, before I jump into that market, I'd like to know those things. However, there are other metals besides gold and silver, that's for sure, and there's some great investments out there. Biden administration moves to halt Pebble Mine in Alaska. Combined with this kind of thing, if companies decide, hey, we're going to get out of the gold mining business, which I don't think they said they're going to do. They're talking about expanding into other businesses, but if they don't produce more gold, or they get out of the gold business, and then you've got things like this where the administration's closed down mines and stuff, all that's going to do is just increase the issues that we have with supply. And with increasing demand, that is really good for prices. So here, we'll see what happens. I'm going to read this article, Ted Butler, A Gold Whale Surfaces. I like Ted Butler. I think when it comes to precious metals, I believe this gentleman is one of the smartest people out there as far as how the markets are manipulated, who the players are, how it's done. And I think Ted Butler actually, I started reading his stuff years and years ago. So I truly believe this is probably one of the smartest guys out here. He was talking about manipulation when everyone else was saying, hey, put your tinfoil hat on. And of course now we know that it's true, and that companies like J.P. Morgan have been fined $987 million for spoofing the gold and silver markets, manipulating markets. Of course, back years and years ago when Ted Butler was saying this, and people like myself were kind of parroting what he was saying, oh yeah, you're an idiot, you don't know what you're talking about, put your tinfoil hat on. And then the truth comes out, they're very silent. So I'm going to read this article by Ted Butler, and he brought up something really, really good, A Gold Whale Surfaces. This is just a new article by Ted Butler. I got to see how much he charges. He has his own site called Butler Research. He charges so much per year, but God, I really think it'd be worthwhile looking into that for myself at least. And let's read what Ted says here. And let me get a sip of coffee because this is going to be a long one here. There we go. Compelling data in recent. Oh, but I didn't flip the coin. I'm holding it in my hand. Doggone it. Sorry, I didn't mean to stop that, but I'll do it at the end here if I remember. Let's read this. Compelling data in recent commitments of traders. Reports point to the emergence of a very large buyer in COMEX gold futures. The last 4 COT reports, starting with the report for positions held as August 10th, show a dramatic increase on the long side in gold for the 4 largest traders, not to be confused with the concentrated short positions that Ted speaks about regularly in silver, the big short positions that manipulate the silver price down for no good reason. And Ted's the one that brought that up, and Ted's the one that can be credited for letting us know about that, again, years and years ago. But I don't think he gets a lot of credit for it. Data over the past 4 reporting weeks indicate that a large non-commercial trader has amassed as many as 40,000 gold contracts, equivalent to 4 million ounces now in COMEX. That's pretty amazing, folks. Wow, large non-commercial trader on top of that. Now think about this. In addition to the concentrated long position being among the highest on record, even more interesting is that the sharp increase began during the reporting week corresponding to the recent deliberate smashdown in gold and silver prices into August 9th. Remember, a couple of weeks ago, or actually a month ago almost now, when we had that Sunday night smackdown that for no particular reason, that was just clearly, obviously done purposeful. And it was a smackdown, manipulation, fraud really happened, but nothing's going to be done with it because our regulators are morons. But I digress. Let me read the rest of this article from here. Sorry. Let me read the rest of this article from Ted. In addition to the concentrated long positions being among the highest on record, even more interesting is that the sharp increase began during their... Okay, oh God, I read that already. What this indicates is that the large non-commercial trader, most likely included in the other large trader reporting category, bought most aggressively into the price smash, apparently by design. For the record, nearly 40,000 contracts of COMEX gold futures has a total notional value of $7.2 billion at $1,800 per ounce. And each dollar move higher or lower would equate to $4 million for whoever bought this position. That's incredible, folks. Man, can you imagine making $4 million for every dollar move in gold? That's amazing. And $400 million for each $100 move in the price of gold. Minimum initial margin requirements would run $8,250 per contract, or roughly $330 million for 40,000 contracts. Wow. Now that's a whale, folks. My best guess is that the position in question was acquired at roughly around $1,770 per ounce average price. Okay, so whoever this giant non-commercial whale out there is, wow, they're in at $1,770 per ounce. Every $100 move in the price of gold, so gold goes just to $1,870 an ounce. They made $400 million. That's incredible. Boy, it's nice to have that kind of money, huh? It takes money to make money, I guess, sometimes. At the same time, a prominent large investor, John Paulson, has been quite vocal about the future prospects for sharply higher gold prices. He is someone who is quite capable of amassing such a large COMEX gold position. In addition, Paulson has publicly remarked that he intends to deploy leverage designed to produce an ultimate return on gold 25 to 50 times his original investment. Holy craps, folks! If he makes $400 million on, oh my gosh, if he makes $400 million on a $100 move, just a $100 move, if he makes $400 million, and it is Paulson, and he's leveraged to make 25 to 50 times, does this put him past being the richest man on earth? I don't know. Certainly, a large core long position in COMEX gold futures augmented with other derivatives, such as an option, would seem to provide the opportunity. So Ted's basically saying here that he thinks, in this little paragraph here, that he believes that it might be John Paulson. And I think Paulson's the guy that made billions on the market crash of 2008, or the home, the housing crash, I think. I wasn't sure if that was 2008. But anyway, let's read along here. The large long gold future position was established and added to on the deliberate price smash into August 10th. So he's saying almost as if the buyer was waiting to start accumulating on lower prices. So it seems that whoever bought that position had positioned themselves to be in a great... It's almost like they knew, or they were right there to pull the trigger, or they're waiting for something, because they pulled the trigger at the perfect moment on the price smash on August 10th, which brought it down to about 1770. So again, if that's Paulson, man, this guy's going to be rich. He's already rich. Make no mistake, whoever the buyer is, it's safe to say that it is not momentum or a technical type trader buying price breakouts, and who is likely to sell on a price breakdown. So again, not commercials, not technical traders that bought this position. Ted's pretty confident that it's someone that's buying to actually sit and hold. And Ted says buying into a severe price decline connotates, I think it's supposed to be, the actions of someone interested in accumulating at lower prices, along with the implication of holding position for however long it takes before the true value is achieved. So that's what Ted is thinking right here, is that whoever bought this is really a true player. They're waiting for the long-term aspects. And again, think about that. If someone's leveraged, they make $400 million for every $100 the price goes up, and they're leveraged 25 to 50 times. Wow, that's the play of a lifetime, I think. I'd like to get in on that, and the fact is, folks, we are in on it. So as long as you're holding on to precious metals, gold and silver, and again, silver will follow gold, it always does. And forgive me for not talking more about silver right now, but we are talking about gold at the moment. Let's look into this here and read the rest of this. These are hallmarks of Paulson's past market plays. Long a gold advocate, Paulson was the largest holder of the GLD, the big gold ETF, in the past, but if he is the big whale in COMEX gold futures, as I suspect, that is something new. So oddly enough, I think Paulson was the largest holder in GLD one time, private holder, but the good thing is if he's in COMEX, I hope he forces delivery somehow. I'm not sure. Wouldn't that put COMEX in big trouble? That's almost like a... If he demanded delivery, Paulson demanded delivery of all those contracts. I don't know how that works, but if he did, that's probably another Hunt brother type move. That would just corner that particular market, and gold prices would just explode on the upside. I'm interested to see if that's the plan, or will he just sell the contracts for cash, or will he roll them over? That's tough to say, but can you imagine if that player that big asked for a delivery? Wow, could he even get it? I don't know. Let's read the rest of this here. I'm going to take a sip of coffee. Should gold prices higher in the future, surge higher in the future, as the buyer of the gold futures contracts obviously anticipates the large purchase threatens to upset the well-oiled machine on COMEX, in force for decades, in which the commercials continuously hoodwink and manage money traders in and out of positions. The large purchase will only add to the burden of the commercial shorts to provide enough new short positions to prevent prices from rising. As word of the large position gets out, other traders may also become interested in gold. And if it is Paulson, who wouldn't want to piggyback on a trade from someone who has single-handedly netted $20 billion in his famous bet against subprime mortgages in the great financial crisis? Absolutely spot on. If it is Paulson, folks, hang on to hang on to something, because we're in for a big freaking ride. 400. That's just amazing. So that you can read this article right here on SilverSeek, goldseek.com, I believe. Just type in a gold whale surfaces on your search engine and type in Ted Butler. This article popped right up. Recommend you read that as well. And again, I read these things to you. Some of them I read a couple paragraphs, some I read the whole thing. However, there's no substitute for rereading it yourself. It kind of burns it in your brain a little bit better. So I recommend you folks go back and reread this stuff if you get a chance. Let's move along to what we got going on here too. Charles Hughes, another guy I like to read. He's Charles Hughes Smith. He does a lot of stuff on economics, not necessarily gold, but this is all stuff that kind of ties into what we're talking about. And let me see, I'm not going to read the whole article. I recommend you do. Please Don't Pop Our Precious Bubble by Charles Hughes Smith. You can type this in, Please Don't Pop Our Precious Bubble, on your search engine. It'll pop right up. I got him on my bookmark bar. He writes some really good stuff, but he brings up, a little paragraph down here I wanted to kind of just read to you, and I'm not going to read the whole article. What differentiates the bubble from the 1720 South Seas bubble, the 2000 dot-com bubble, or the 2008, 07-08 housing bubble is this bubble includes every asset class and has sucked the entire populace and economy into its magic maw. The bubble has swept up housing, stocks, junk bonds, commodities, cryptocurrencies, NFTs, numerous collectibles. The bulk of America's household assets are firmly lodged in the maw of the everything bubble. And you know what? I really didn't think about that. I mean, it's true when you think about it. This is one of the most unique bubbles we've ever seen in history. And Charles kind of pointed this out to me. This is why I like to read his articles. It is. Think about that. It swept up everything. Housing, stocks, you name it. People are buying up everything. Video games are selling for like $1 million. Old video games. NFTs of some crappy-ass art sold by Sotheby's for $25 million. What the F, folks? We are in the all-time epic bubble, epic credit bubble of all time, created by central banks and governments. And it's going to pop, and they're going to, I don't know what's going to happen. How's this roll out? How's this... anyways, he's exactly right here. And I think that was an important little comment that a lot of us probably haven't thought about. We are in the everything bubble right now, folks. And when that thing pops, man, where does it go from there? And who ends up floating on the surface? I mean, gold and silver owners. I think gold's been around for 5,000 years. I think if you own gold and silver and precious metals, you're going to do far better than you are if you own an NFT that you bought for $25 million of some crappy art, or some video games, some electronic Mario Brother video games from the 80s that you paid a couple $100,000 for. Or, I mean, again, gold and silver's been around for 5,000 years, folks. If I was going to have anything for a life raft, that would be it. Not collectibles, not other things. That would be my primary life raft. Now, do you diversify into other things? Sure, why not? However, the only life raft out there is gold and silver, and that's just my opinion. Not much to talk about on ZH here. I saw this. It kind of ties into what we were talking about Bitcoin a couple days ago, and El Salvador. It's funny, you've got somewhat third world countries like Ukraine parliament now passes law to legalize and regulate cryptocurrency. That kind of, when you get two third world countries jumping in there, it's almost like they're being set up to fail, especially Ukraine and El Salvador. I mean, sadly, I should say that, it seems like these two countries are being suckered into the crypto space. What are they going to buy up all the stuff the whales are going to unload on them? I don't know, but I don't know. It's just weird. It's just weird. I'm not too fond of any country that starts looking at cryptocurrency as a viable means of money. Again, going into a cashless society sucks, man. I don't want to be there. I don't want to live in a cashless society, so that's for sure. Oh boy, let's take a look at Seeking Alpha. I recently got a subscription to Seeking Alpha. There's not much new to read here. However, what a great website. Again, cheap subscription rate. Recommend that you folks do it. I think a lot of these articles you can read for free, but they have a lot of back-end stuff here that's you have to have a paid subscription to get. Again, some of these articles I believe you can read free online yourself, but there's some good stuff out there. Nothing today really. I read this one yesterday, so kind of let's move along from here. Same thing with the American Institute for Economic Research. Not too much to look at here as far as gold and silver news or other news that are relatable to gold and silver. However, you know, I like to read a lot of economic and political stuff, and only because it ties in with what we're doing. You know, if our politicians are running this country into the ground or running the world into the ground, you know, I hate to say it, it's good for gold and silver owners. If the banks and central bankers and corporations are running the world into the ground, hey, that's good for us. So, I mean, these are all, we have to watch politicians, we have to watch corporations and economics and central banks and all this thing. It ties into what we're buying, what we're talking about here. But not too much to talk about on this article today. I'm going to kind of just move along to yesterday's video and answer some questions from the comments. Let's see, yesterday's video, the topic, sorry, close your eyes and make you dizzy when I do this. U.S. Mint out of gold. I think a few folks kind of misunderstanding that I was saying that the country, the world's out of gold. And that's not what the article I read was about at all. The U.S. Mint is having a hard time sourcing 400-ounce bars. I guess that they need to use to make the planchets in order to make the gold eagles. And really the question is why is it so hard for them to find or get 400-ounce gold bars made, especially the U.S. Mint? You figure if the material is out there, the big dogs like that would be the ones that would be the first in line. I think someone had made a comment on here that, well, you know, there's plenty of gold out there in the cyberspace and at your shop and everywhere. How can there be a gold shortage? But again, you know, we're dealing in small numbers. The online guys are dealing in small numbers. I'm dealing in small numbers. We're not dealing in, you know, millions of ounces. So, you know, I guess when you got to go out and buy millions of ounces, that's where the shortages, where you start to really see shortages. And that's the issue we got going on right now. Answer a few questions here. Rare breed, sorry about that, brother. You'll like Florida. If you're in New York City and you're going to come to Florida with the stack you can't find, well, hey, listen, big changes and you're going to enjoy Florida. Florida's a great place to live. But remember, when you come down here, don't dress like you are from New York. You know, no long pants, no long sleeves. Get yourself a nice pair of shorts and a lightweight shirt and a hat and a pair of flip-flops, and you'll get rid of the first problem that most people move to Florida. It's too hot. It's too hot. Thanks for watching, Rare Breed. Appreciate it, and good luck on your trip down here. The beauty of gold and silver, no matter how much bull they throw over it, it always keeps shining. Exactly. Thank you, sir, for watching. Steven says, light a fire for a man. I say one of the purposes of my videos is, you know, you can give a man a fish and he'll eat for a day, or you can teach a man a fish and he'll eat for life. And Steven says you can light a fire for a man and he has a fire for one night. Light a man on fire and he has a fire for the rest of his life. I thought that was funny. Look, I guess these are all porn things. I got to remove those. Sorry about that, folks. Just learned what they are. I've never clicked one. I wasn't sure if it's something that take over my computer or not. Chris says, Brian, we have all buying strategies, but could you do a show on selling strategy and the best way of doing so when we decide to sell most of us won't know? You know, that won't be hard to do, Chris. A show on selling. Let me think about that. Well, yeah, I could put together a show on selling, but it's really quite simple. My suggestion when you go to sell is find yourself at least one I suggest to get a couple because one guy may close when time comes to sell, or you may want to have a little competition between your different local dealers if they're competitive at all. But the number one thing that I recommend, and I would probably say over and over on a selling show, would be find yourself good local dealers. And if you can find one in your city, or 2 or 3, great. If you can find one in your city, one in your county, or just find somebody. Even if you have to drive an hour, 2 hours to do it, even a 3-hour drive. I know some of you live in big states, but even if you got to make a couple-hour drive to find yourself a good dealer, good local brick and mortar dealer. As far as selling strategies, and if you can find more than one, great, because you can call one and say, hey, what's your price? What's your price? But that would be my suggestion, is just find yourself some good dealers, at least one good dealer you can work with. That would probably be the most successful selling strategy for gold and silver stackers I could give them. However, there's other things we can talk about when the time comes. But Chris, we're not even close to a seller's market right now. Not even close, sir. I'll let you know when we are. Thanks for watching. Last, Living Old Cowboy, how about a fish watching and political comments? Fish watching and political. I like that. I like doing a show about fishing and political comments. Combining the two together. Wow. I think we're onto something here at Last Cowboy. Thanks for watching. Chris says, I agree with Chris on the comments page. Please go to some selling strategies. Absolutely, Chris. Again, we're not even close to that point, but number one thing I can tell you is find a good local person. Absolutely. That would be my best advice. And if you can find more than one, that would be the ideal. That's number one. Thanks for watching again, Chris. Brand says, Brian, the misery model is 100% flaws. They use a CPI lie and not the U6 unemployment. Yeah, well, I guess what you're saying, Brand, is I can assume that the misery model is actually underreported, and the unemployment and the employment levels should be higher. So let's just imagine that those graphs, the lines, are even longer than they're supposed to be. But I think we can still use them as kind of a guideline somewhat. But yeah, I think you're probably absolutely correct. They're using the CPI and not U6 unemployment. The CPI lie, exactly. Hey, thanks for watching. Lucky Winner says, Brian, give a man. Oh, yeah. That's Confucius said that. It was not a biblical saying. I don't know why when I was younger I used to think it was a biblical saying. A while back ago someone said, no, stupid. That's not a biblical saying. And, well, thanks for clearing that up, Confucius. Okay, cool. Thanks, Lucky Winner. Victor says, don't understand how people say gold and silver be confiscated, but governments have made millions of gold and silver and coins. Victor, that's because they don't know what they're talking about. Anyone says that government's going to confiscate your gold and silver coins, that's just a bullshit marketing ploy that was used to get people to buy overpriced pre-1933 gold. And they still use it to this day. Well, it's safer if you buy pre-1933 gold because they can't confiscate because it has collectability. Well, first off, that's just a marketing bullshit lie to get you to pay 20 to 30% more than you should for a regular bullion product. And it's a tactic used by a lot of sellers out there, sadly. Mostly telemarketers and some online people, unfortunately. And I don't go for that. I don't go for that. That's a whole different thing. Just buy cheap bullion. Thanks for watching, Lucky Winner. And, oh, I'm sorry, that was Victor that said that. Thanks for watching, Victor. Neil says, buy silver. Agree with you. Victor says, sorry, public schools don't teach supply and demand. You're absolutely right. If the spot price of silver reaches its all-time high, would the premium still be there for buying or selling silver eagles? Good question, Jacob Lopez. What you're basically asking is that silver eagles right now, and this is a common misunderstanding that I think a lot of people that buy silver eagles, again, don't get me wrong, love silver eagles, hate the premium, that's all. Premiums are ridiculous, and remember, we're buying this to put away and make money. So overpaying for premiums is not smart. It's not making money, folks. Again, don't hate the product, love the product, but if you're paying a $7 premium, and I've heard this from people, well, you know what? When I go to sell it, I'll get $7 or I'll get $5 more for it. No, 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 no. Maybe if you go to sell it in a buyer's market, there's buyer's markets and there's seller's markets right now. It's a buyer's market right now. We sell 10 times more than we buy over the counter. What that means is that products are a little tougher to get. This is why we're seeing higher premiums on silver eagles, because there's more buyers and sellers. Now, if you're paying $7 over right now in a buyer's market, when you get into a market when silver's $50, 100, or whatever it may be, and you get into a bubble tear and everyone's selling, you say, hey, this is a great opportunity for me to sell my silver. Now you're in a seller's market. you're not going to get that premium. Those premiums are gone. The guys that bought Silver Eagles for $7 over, $10 over, whatever the hell it was, and other high-end products, high expensive premium products, especially pre-33 gold and that kind of crap. Excuse me there. I almost choked on crap. I get a cup of coffee here. Hang on. Especially people that bought that stuff are going to be standing in line next to the guy that bought the ugly-ass gold bars and the ugly-ass silver bars and Krugerrands and the cheaper premium stuff, and he's going to be getting about the same money. And he's going to be scratching his head going, oh, I paid more for it. How come I'm not getting as much? You know why? Because I told you so. And trust me, I've had these guys in the store. I've said, hey, don't buy Silver Eagles. It's a bad deal. They buy them anyway. I don't get it. I've got experience in this field. I've been doing this since 1977. I've been doing it in this place full-time since 95 in this location. I can tell you, without a doubt, I know what I'm talking about. So if you come and ask me why I shouldn't buy Silver Eagles, and I tell you the premiums are too high, and you say, well, I'll get it back later, and you still buy them, it's your fault, man. It's your fault. You overpaid, not me. I didn't mean to go there, but it's true. MS-70 Eagles, no way, Jose, stay away. That's collectible stuff. And you know what? MS-70s are bullshit. Come on. That whole MS-70 market is nonsense. It's a created market. In my opinion. And I'm a rare coin guy for a long time. I know all the grading services. That's a frickin' game. 69 and 70. It's a frickin' game. Proof 70s. And stay away from anytime someone's marketing that says Proof 70 and they're getting a huge premium for it, or Proof 69, especially for common type coins. Stay clear from that stuff. I probably got to do a coin show sometime because a lot of people are way overpaying on coins and buying shit they don't need to be buying. But thanks for watching, Jacob. Appreciate it. Jeremy says, I'm 40. I grew up conservative. I've been off Fox for 6 months. Good for you. Off Fox News. Me and my wife started reading the real news. Jeremy, that's what I discovered in 2008. Smartest thing I ever did. One of the smartest things I ever did, not the smartest thing, but one of the smartest things I ever did in my life was turn off TV news. Just turned off. No Fox, no CNN, no MSNBC. I have not watched it since 2008, honestly. Now, you're going to say, well, how do you stay in touch? I read the news. Now, do I read some stuff done by Fox? Do I occasionally look at a video clip or CNN? Yes, but I read mostly. The TV is poison, folks, when it comes to news. It's poison. Don't watch corporate media. It's brainwashing sheep bait. Sorry, but it's true. And congratulations for being off Fox for 6 months. And you folks that are off CNN, off Fox, off television, TV news, congratulations. Smartest move you probably made in a long time as far as becoming smarter politically and economically. Thanks for watching, Jeremy. Helen says, I'm new subscriber from England, the second most debit country in the world. God, Helen, what a great country England is. I got some really good close friends out there, and boy, you guys are really going through it right now. I feel for you, man. Hey, listen, our officials and government people here are no better than anywhere else in the world. They're just as much boneheads and assholes. So I get it. Hope everything's going well for you, Helen. Thanks for watching. Inspector says, good show. Hey, thanks, Inspector. I appreciate it. And thanks for watching again. And Joey, I think you called me yesterday. Sorry, I was in the middle of another phone call when you called, but thanks for calling. That's a problem with me sometimes. I'm just, when I'm not doing the show here during the working hours, I've got 2 phones going, I get customers out front, so it's a little tough for me to talk sometimes. But thanks for calling, Joey. I appreciate it. And I'm glad you enjoyed your motorcycle ride. I'm hoping to go out for a ride today. It's nice and sunny today. Wow. Hey, thanks for watching again. All out of metal. Oh, yeah, Doodler asked me, all out of metal, why does the price keep dropping and every single site has them for sale? Why? It's just pure and simple monkey hammer. It really is. It's manipulation. There's no reason physical metal shouldn't be higher other than the games that are played in the paper markets. And unfortunately, the paper markets are like, it's the tail wagging the dog. The dog being physical gold and silver, the tail being the paper market. And for years and decades now, the tail's been wagging the dog. That's going to change, and it has been changing. And you can see it in the form of physical premiums for physical, and you can see it in the form of shortages of people trying to buy real gold and silver. So it has been changing, and it's changing even still, and it's going to explode upside one day. You're going to wake up one morning and you're going to say, holy crap, what happened? Thanks for watching, Doodler. Michael, thank you, sir. Appreciate that. And with many country states that have untouched minerals still, untouched minerals still in the ground, Let's see. I don't see bullion rising. If it does, our crooked government will bring it. Yeah. Hey, Carl. Here's the thing: all markets are manipulated. Everything in our life is manipulated from the day we're born. It's just a fact. We're manipulated the moment we get in school. We're manipulated by our parents. We're manipulated by society, by television, by you name it. So I mean, it's all around us, and our markets are manipulated even more, and it's even more in our face. Government manipulation by giant corporations. I mean, manipulation of everything, even elections, it seems. I mean, you got to get over it. And here's the thing. This is the reason I do these videos. Number one, gold and silver are not going anywhere. They've been around for 5,000 years. They're going to outlive all these idiots and central banks and governments. And officials. They're going to outlive them all. They're going to outlive us. All right? So I'm not worried about that end of it. That's one thing I try to teach on these videos here, is don't worry about it. It's been around for a long time. It's outsurvived everything. Your money in gold and silver is a good protection. You know what I mean? It's wealth preservation at the very least. All right, so that's one thing. And the other thing I try to teach everyone is, of course, the game is rigged, but if you don't play, you can't win. So what I'm trying to teach people is gold and silver is never going to go chapter 11 or chapter 7. And if you just put it away, you're never going to have to worry about your money disappearing, ever. It's about wealth preservation. So at the very least, wealth preservation. And shouldn't we all be preserving our wealth at some point, whether you made the money in crypto, whether you made the money robbing banks, or whatever the hell you did? Shouldn't you save some of that money in a safe place? And that's what gold and silver is about. Paul says, thanks for watching, Carlos. Paul says silver will never be used as money again. Blockchain crypto backed by gold. Silver costs more than gold, as all tech needs it. A couple things I could agree with. Silver will never be used as money again. That's sadly likely. However, wouldn't it be cool if it did? But it won't, because there is a shortage of silver out there. I believe there's probably more above ground gold right now than there is silver, because silver is used as an industry. It's thrown away in landfills. It's not recycled, hasn't been until maybe recently too much. And electronics, everything's going electronic. Cars are going to go battery. It's going to be more electronics in cars, more silver solder to use. So yeah, I agree with you. They can't afford to put it in money unless they. Again, I don't see us coming out as hard money again. The countries love fiat too much. They can print as much as they want, and that's what governments and central banks, corrupt governments and central banks do. Silver will cost. Hey, thanks for watching, Paul. Jeff is at the pier. Very cool. Good for you, Jeff. Hope you're not fishing, because there's tons of fish down there, but I'm sorry, I shouldn't say that. It's hard to catch fish off that pier. And then you look under the pier, there's like 6 million fish eating each other, and then you stick something down there you think would be tasty for them, and they just look at it. Neville says a coin flip is more scientific than chimpanzees throwing darts at investment funds. I don't know about that. Coin flip. Hey, thanks for reminding me. I almost didn't do the coin flip here. Ready? Let's see. I'm going to just do a flip on my hand. Ooh, bear. Okay, so it says a bear. Not quite sure what's happening today, but there you go. Thanks for watching, Neville. I appreciate it. You might be right. Silver Tard says, I'm a gold guy, but just bought my first tube of platinum Britannians. Go, Silver Tard. Absolutely. Platinum is super cheap, man. I don't think you're going to regret that purchase for sure. Well, we've done this video right here. We've got through another day, and gosh darn, another week too. It's Friday, man. Well, so thank God it's Friday too. Well, folks, I hope you have a great weekend here. Thanks for watching, and for you new folks, please hit that subscribe button, and if you haven't forgotten to do it already, hit that like button. I appreciate it very much. Again, hope you have a great weekend. Let's see what happens on Monday, and I'll talk to you then. Bye now.